I think I just I hope that this didn't happen. But I think I might have not been recording. Um, and if so, I hate that. Uh, Jeez. Okay.
Yeah, you dropped some nuggets in there too, Corey.
Hey, I'm so sorry. I just realized it too. Um,
That time you that started.
I thought it started though.
Yeah, yeah,
I,
it was there.
Hmm.
I don't think so. Um,
Then you started to talk like today is this day and we are looking this. So it was started that time. I heard that. I don't know what happened in between.
okay.
Mm.
All right. Well, hopefully, that's not the case, but um, either way, I want you really to take the time. Like we went over like our whys, and we've been talking about our whys for the past couple of weeks now, and it all ties into itself. Your why, your standards, discipline, all of that stuff ties into itself, right? And you can be more disciplined when you have a standard. You could be you can hold to your standards more when you have a why, right? You can be consistent when you're disciplined. You can be consistent when you have a standard because now you have a mile marker. You have a checkpoint to always know that I can fall back to. And I think that that's where we kind of operate a lot of times is we don't have that checkpoint. We don't have a mile marker to fall back to. And when we don't have that, we operate in a way that leaves us in almost a a 100% or 0% standard, right? Either we are doing it or we're not. When it's not the case, it's not a black and white situation like that. Sometimes you're doing it and you're just not doing it at 100%, but you're still doing it. You know, sometimes you're showing up and you can't give it 100%, but you still showed up. And that's more important than not showing up at all. And we almost bash ourselves in some cases to an extent where we only look at the fact that we didn't show up, you know. We only look at the fact that, we didn't do our goal or we didn't reach our goal. We don't look at the fact that we made so much progress to get to the goal and we're still making progress towards the goal and we forget that. And that's where I want us to shift the mindset, right? Again, like I told y'all, because of my job a lot lately, I have not been able to finish my challenges. I haven't been able to trade a lot. I haven't been able to trade as much as I want to, but I'm 50% of the way on a couple of them, right? I'm 30% of the way on a couple of them. So I can't look at that as a negative, right? I have to look at the fact that I only have 70% left. That's a lot better than having 100% left. I have 50% left. That's a lot better than have 0% left, right? I still was able to move towards the goal, right? And you have to consider that more than anything, right? I also have to consider that a way that you can flip that from a mental standpoint is I am so good that even despite working on these huge projects, even despite being physically having physical ailments of recent, I'm still able to get 50% of the way done or 30% of the way done. That's how you switch that same conversation, right? The same conversation that I just had with myself by saying, dang, I can't believe I ain't finished this. Dang, I can't believe that I ain't made this amount of money, right? But at the same time, you switch that around, and it's actually something that it's actually strength that you've just shown and proven, right? So that's how we got to move, right? That's how we got to change our brains to consider, and we have to look at our baseline, and as we improve, we can move the baseline up. Because going back to the runner's guide, right? We started off only doing zero point 0.1 miles. We can change that to be zero point 0.2. Then we can change that to be zero point 0.3. We can change that to be 1 mile, right? And then as we improve, instead of us falling back to 0.01, we know, hey, I'm good. I was good with once I reached the point to 1 mile. I was good. I was able to do 1 mile every day. I don't have to go all the way back to zero point 0.1. I don't have to do that. I can say, instead of going back to if I failed to meet the standard, I know my new minimum is 1 mile now. That'll still get you to where you're going, right?
Yeah.
So that's the mindset session for today.
Yeah.
And I want you to take this and run with that. Like, I take that and really dive into that video, because it's very, very powerful, right? And it's
Mhm.
something we don't consider a lot. Um, Let me also show you
Most people
guys. Hold
what they
on.
can do in a day, but they dramatically underestimate.
Let me show you guys too what I was telling y'all about the week before last, when I told you when I was trying to show you guys about the Notebook LM. So in Notebook LM, like helping you to, I'm all about learning, and learning in every kind of shape, form, or fashion, and how I can improve that learning. And I told y'all about the YouTube to Notebook LM Chrome extension. And what I was missing was when you install the plugin, right? And when you install the plugin, right, and you go to the page, right, there's an option that you need to click. Hang on. After you got the plugin installed, you're gonna right click it, right? And then you see this where it says this can read and change site data. You need to click on allow all sites. That's why we were getting that error from before. So now if I go to a page that I like, again, after you install the plugin, you'll see this Notebook LM icon. And after you set up your Notebook LM account, you'll get that icon. And now when I go to a playlist, let me go to somebody else who I like. Let me go to somebody else I like. Um, Fluffy. I don't know who this is. I don't know who this person. This person doesn't have it in playlist, but let's find one. Um, let's dig through. So, um, Flow Designer. So this is a course, and like you guys know that I also write code as well, right? So this course is something that I'm interested in, that I want uh to learn, right? So I'm gonna go to this person's playlist, right? And this particular section is like ServiceNow developer, right? I'm gonna go to this person's page, and this has 18 different videos, right? And now that we set up the extension and we got all the permissions clarified, right? When we go to click on this, you'll see that this has a little icon, Notebook LM, here and here, right? The one that's here will create the Notebook LM source from this particular video, but this is actually for the whole playlist, right? So if I click this, I can create a new notebook inside of my Notebook LM. And we're going to go ahead and create the notebook, and it'll open up in the notebook, and it'll grab all of that source, all of those videos that's in this playlist, which are those 18 videos. I can now use those videos as sources to create my own learning environment, right? So now in each of the videos that are in that playlist, I got the video link, I got a summary, and I have the transcript down here below, the transcript of the whole video. And now I can ask it questions. So like, now I can ask like, hey, because this is a program, right? What's the best, just a random question. What's the most talked about subject in this training? I can ask it anything, right? And it's gonna search through all of the different sources that I've already accumulated, right? I've already accumulated all of this data, and inside of this data, now, okay, now that I know what's the most talked about subject within this training, I can say, and they told me it was server side scripting, business rules, um, glide record. Let's say that I want to know can you give me an example of a glide record script, right? You don't necessarily got to focus on what I'm talking about here, but just consider this as your own use case, right? So since one of the main things that this training talks about is glide record, which is here, then I can ask it questions about that, right? So now that I know that I have something, I have my source build, right? So now I can ask it questions that are specifically for this and about this, right? And it's giving me examples, it's giving me code examples, is going through. Now I can use this to, all right, now I have an idea of what this particular topic is. In a way, in trading that we can use this is I pulled in one video from ICT, right? He just dropped this on the 11th. And this was he blocks his stuff, right? But you know how he is, right? He's real. Don't be taking my stuff, but I'm not taking it to sell it. I'm just taking it to use it, right? But you know, one of the things you can do, again, you got the summary, you got the link to the video, and you have the transcript, right? And one of the things you could do, like you can do a mind map, and in using the mind map, like I showed y'all the last week, this basically gives you what the course is broken down into different primary sections of the course and primary and subsections of the course, right? And then, once I expand this, this is the subsections of the course, right? And if I want to know, like, all right, this is ICT's price delivery PD arrays right here. How can I learn about fair value gaps, right? Click on this. Discuss what these sources say about fair value gaps in a larger context on ICT. So, all right, now if I want to do a deeper dive into learning fair value gaps, this gives me the context that I need to study. All right. This tells me all I need to know that we have in this video that explains this is hey, a fair value gap and related inefficiencies. A fair value gap is essentially a price inefficiency or a gap that appears on the chart. These gaps represent instances where price action had only a single pass, right? No need to deep dive any deeper into this, but this is like giving you the content that you need and the context that you need to go deeper into what you're studying. So now that we got this information, we could take this to our charts and go ahead, and this is how we can teach ourselves and get a deeper understanding about what we're trying to learn, right? Okay, longer session than I thought. We already took up the first 30 minutes, but um, so now I'm gonna just kind of hurry through and jump on the charts, right? So, oh, but before that, anybody got any questions, comments before I
Yeah,
start on the charts?
yeah, one more thing. Like once you install that extension, then you don't need to do that again, right?
Nah, nah.
So that day I did that and everything was there. Like I can save from Note LM book as in your video it is coming. But right now I don't see that even in Jim Brown section also. So can you means briefly tell me how to install? Yeah.
So you'll just go to YouTube. You just type in YouTube to Notebook LM Chrome extension, and it's this it right here. And then this is the extension.
Mm-hmm.
You'll just add the extension. I already have it, so it's already there. You
Right.
probably need to close your browser down and restart it.
Okay.
And then once you do that, you'll see that you have this little icon. If you don't see the icon, it may be hidden. So if it's hidden, you'll see this. If you don't see it and you already installed it, hover over this icon, this extensions icon, and then
Mm-hmm.
you'll see all of all of the extensions that you have. And
Okay.
if you don't see it, it's probably listed like this where you don't have it pinned. So you'll just need to pin it, and now moving forward, you'll see it at the top in this area. And then after you pin it, right click it, and then um, right click it, and then hover over this drop down. This can read and change site data, and make sure you select all sites.
Okay.
That
Got it.
what I didn't do the last time.
Okay. Okay. Got it. Thank you.
No problem. No problem. Anybody else?
Just asking, what does this extension do? Because I'm able to enter this notebook LM, the website on my mobile phone.
Uh-huh.
So this extension you just added, what does it help this website do? Does it enhance it more?
It's just a tool to help enhance your learning. Um, like I showed you before, if we go to, like, let's say for instance that again, this is a video. Let me go to a trading video so you'll see it even better. Um, let's go to look up candlestick charts, right? And this video goes over uh this is guy J Capital. His real name is Kyle, and he talks about trading like the same way we trade, right? And in this video, he goes over his strategy, right? And let's say that I want to, I want to listen to this video, but I also want to break down from all that he talked about in this particular video, right? So let's go ahead and open this video,
$20,000 from one trade.
right? And after we got everything set up, let's say that I want to, use this to learn from this video in a deeper way, right? So what I'm going to do is I'm going to grab this link, and then I'm going to go into my notebook LM, and I'm going to create a new notebook, right? And in creating this notebook, you have the option to upload sources, right? This source could be from a Google Workspace, Google Drive, a website, YouTube, or just plain text that you have, right? That you've already vetted, right? In this case, it's a YouTube link, right? So
Yeah.
going back to the YouTube link, right? We know that it's talking about his candlestick pattern, his candlestick strategy, and I want to learn this. And I already copied the link. I'm gonna drop the link in here. And now what this is doing is this is taking the link that I just copied and making it a source that I can use to reference at any point, right? It's a summary of the video. The main topics that it talk about, he uses an engulfing bar strategy, candlestick trading patterns, market maker models, liquidity and swing points, risk management, and trade size. That's the main things in this video, right? And then I got all of the transcript, so I can read through all the transcript. I can go back and watch the video, and I can reference all of this stuff throughout the video. I can um I can from this particular source that I have, I can get this to create me an audio overview, a video overview, a report, flashcards. I can use this to create me a Q&A, a quiz. I can use it to mind map this where I can get it to take all of the main topics and then create a die relationship between all of the different topics. And like in the which one? This is one of my own strategies that I use. I been talking about this strategy for years now, the 415 model, where I use the 4 hour candle and the 15-minute candle to get my setups. And I just kind of like took all some of the notes that I've went over throughout the past couple years, and I've been just kind of going in and throwing them in here. You can see some of my sources are from YouTube, some of my sources that kind of align with what my strategy is. My notes from that I've taken in previous time frames throughout my trading, and then I just merge them into one overall strategy, right? And to get a deeper understanding of that, right? So and I took all that, and now um I did a mind model, a mind map. I did audio. So if I'm in my car and I want to review this, or I'm out, out and about, I'm on a plane or something like that, and I want to review this, I can always come back to this and I can listen to this and I can review this and always have access to that to improve my my understanding of that particular subject, right? And like I told you, like the issue we were having before is just that, when you right click on this, just make sure that you collect all sites and you can either get the individual video from here or you can get the entire playlist. Got it?
Yeah, sure. Thank you. The video overview that you have on the notebook LM. So once you click on that video overview, does it take you back to the YouTube video or just like creating a video you
Create
want for
video.
yourself?
Yeah, it creates a video. It creates an audio of this stuff that you have included. So let's open up the audio.
Welcome to the Deep Dive, your shortcut to understanding complex topics. Today, we're diving into the often fast-paced and pretty intricate world of intraday trading. Our mission, to really unpack a specific structured approach designed to help you make sharper, more informed decisions quickly.
Exactly. We're talking about the 415 trading model. And our goal for this deep dive is basically to extract its core logic, walk through its, very precise step-by-step rules, and then bring it all to life with some practical examples. You'll see how this model specifically helps to connect your daily market perspective with your actual intraday trading moves. Gives you a much clearer picture of, well, what the market intends to do.
And this isn't something that I created myself. This audio is actually what's been created inside of this tool. The video is here, and it's again talking about this same topic and giving me another
All right,
learning tool,
welcome to
right?
the Explainer. Today, we're going to dive
It's
into
very
some
interesting, like a podcast.
system that's
Exactly.
all about cutting through
Yeah.
that daily market chaos.
I'm gonna just skip through some of
Structure
this.
and ask yourself, which is more likely to be taken out first? The most recent significant high or the most recent significant low? That's it. Your answer to that question sets your entire direction for the day. And this lays it out perfectly. There are really only two outcomes here. If you think that previous low is going to hold strong, well, you have a bullish bias. You're expecting the price to go looking for liquidity higher up. So what do? You hunt for long setups. On the other hand, if you think that previous high is more likely to hold, you're bearish. You're expecting price to go hunting for liquidity down low. And so you're going to be looking for shorts. You see, this one decision literally frames your entire playbook for the session. It's that crucial. Okay.
All right. So you see how you can, and this gives you the means to say, like, this is just like a deep dive, a brief, a critique. You can go in and define like actually what you want to pull out from this. So if I want to only focus on certain topics within this particular notebook, let's say that I want to just talk about how do I find bias, right? I want to create an audio that I'm only looking for how do I find the bias, right? And this is something that, a lot of us struggle with, right? So I want to only focus on an audio for me specifically that helps me to learn how to choose direction, right? We're going to type that in. Help me to find bias. And in this audio, I want to discuss how I can improve on determining bias. Generate. Give it a few minutes. We'll come back to this whenever it's done, and then we'll see that that's been created, right? You can do this on any kind of topic you want, right? I got a couple of them, right? And I copied ICT's whole 2022 model, his 2024 model. I haven't had a chance to watch all the videos, but I have all the content now. I can still learn from this, even though I haven't even watched all the videos, right? This is one subject that I was thinking about neurology for traders, right? And just how you use your mental in your trading decisions, right? Trading, my daily bias trading study guide, right? This is something else that I came up with, right? There's only one source in this, but I can add on to that. Another one that, I'm trying to like focus on like personal development, right? So, I took the channel Jim Rohn, right? Jim Rohn's channel, and I pulled in all the sources. Now it's a free account, and since it's a free account, you can only have 50 sources. So that particular page has like 294 videos in that particular playlist. So I couldn't pull them all in unless I upgrade this. But 50, that's cool because I can go back and get 50 here, 50 there, 50 this, or whatever the case is. And or I can just manually pull them in as I want. But again, right? Now I have all this data, I have all the information from there. If I want to know what he was talking about, I got a summary of this one. I got a transcript. Then now I can just say, hey, can you create me an audio? So now I create an audio, I can say, hey, like what are some of the most important things that came out of this? And then, help me to get a guide of where I should go and which ones I should start on, which videos I can ask it all kind of questions now, right? And just like I showed you with Kyle's model, right? Where he talks about his engulfing candles and all that, his strategy. I can use that to learn and take a deeper learn, a better um, and deeper understanding of the material. It's still creating. This audio is still creating. So we'll still need to come back. But while we're waiting on that, I'm gonna go ahead and take the last couple questions if anybody got one. Um, if not, we'll go ahead and go over the charts. Going once,
Oh,
I'm
sure.
not
Thank
able,
you, Corey.
no problem.
I'm not able to add that, but we will talk in last. We can finish chart first.
Okay.
Mhm.
Okay. First thing first is this week we got holiday on Monday. We got the bank holiday on Monday. We are observing Columbus Day. On so the bank so Monday markets will be closed. Tuesday we got Powell speaking. It won't be a rate decision or nothing like that, but he's just talking, so you got to pay attention to that. Wednesday we got manufacturing numbers. Um, Thursday we got PPI and we have retail sales and unemployment claims. And then on Friday, it looks like we got a blank slate. I'm not sure why Friday is empty, but it is interesting to see that we have an empty Friday. So
Yeah, right.
yeah, that's kind of
Never
rare.
seen that kind of.
Yeah, that's kind of rare. Got nothing on Friday. So when I see something like that, that means that we need to definitely pay attention to earnings, right? Because usually on those kind of days, that means we got a heavier load of earnings on those kind of weeks. When we got light news weeks, we probably got a heavy earnings week. And it looks like we got a lot of financials, right? You can see Bank of America, Morgan Stanley, Citizens, First Industrial, not First Industrial, but Citizens, Pinnacle, Banner Bank. Like we got a lot of bank, a lot of financial. We got American Express, Ali. So I think we even got Interactive Brokers. We got TS. Uh, we got Key Bank. So got Charles Schwab. We got a lot of banks that are reporting. So finance sector does drive markets. And then you can see on Friday, a lot of earnings on Friday. So that's where we're going to likely get our moves from. What happens with these financials. And of course, we always got the leader right now is tech sector, which is um, mainly controlling the market right now. That's kind of where we want to like be patient with our charts this week. Um, as far as the option plays, my option plays pretty much for the most part were a success, right? The only ones we had having some issues with is this Neo setup, right? Neo is down I think we're down about 10% on that one, maybe a little more than that, but because we took out this low and this low, these lows right here. So all these lows got taken out, which I wasn't expecting. And under normal conditions, I would assume that this would be okay. But we got some things that took place that kind of threw this off, right? And that's your boy, the normal, your boy Trump, man. He threw some tariffs, 100% tariffs on China, and that caused the market to just tank. I think we down 3%, 2.5 to 3%. I think on Nasdaq in particular, and then everything else is also down. So I won't be adding on to Neo until I see some bullish purchasing again. See, till I see something like a wick to the downside or engulfing candle, I'm not gonna add on to that position. And I don't mind because I only got a few contracts on this that are still left on this setup, and this contract doesn't expire until May. So I think that this is leading us into our dip before our sell off before we dip. Usually end of the year we do get a sell off, and then we get a strong buy up because we got the holiday numbers that come in. So that's kind of what I think is happening. This is definitely sucks that we took such a big hit on the markets overall this week, but it's actually in line with what normally tends to happen. So it's not a time to panic. It's actually a time to set up for the next move, right? So I still like Neo. I'll watch Neo to see if we get a retracement. You know, we could be using this area to push down. We already pushed down, but and then push back up in this area to sell off again. Or we could be holding inside of this price gap or coming down into this inverted fair value gap area right here. So I'll watch to see what we get around in between this 678 to 620. And then if we break that low, I'll be watching us in 587 to 554. If we get down in this area, I'll actually start to buy a few more than normal. I'll start adding more size as we get down in this area. And in here, I may buy, if we see some buying in this area, I may add on up here, but like maybe a single contract. Maybe if we get down here, I'll add on like one or two more, or two or three more than I would normally add on, or that added here. But like at that point, we would have like lowered our risk on that and see how it plays out. Because again, this won't expire till May 15th. So we got plenty of time to get out of that if we do see something. Delta. Delta was a banger. Our entry was down here around 50, between in this area right here. Between 556 to 550, not 556, but I'm crazy. It was between 56 and 57 for most of the trades. And we pushed as high as 10% up on that trade. So we were up 100%. I had pending orders to close me out, which and I went over that inside of the group. So this was 100% off of both of the contracts that we had on that. I think we had the October 10th contracts and October 17th contract. And they were 58, 60, and 62 for me. And then on the 17th, I think it was 60 or 62. I can't remember now because I already closed those out, right? But now that we've already passed earnings, I'm not really focused on Delta right now. I don't need to even think about Delta until we see some sell off, right? I actually want to see Delta sell off into this earnings release. This strategy I'm using is just the earnings strategy, right? So they already reported for this. They don't report again until January the 9th, right? So I'm actually hands off on Delta. But if you do want to try to get into some longer term leaps, maybe you want to get in on this January calls and try to take some buys on the January call. I would let the market drop first, and then try to get in closer to the time when we get to earnings. I know, I think I went over this strategy before where I like to see the market trading down to a point of interest just before we get to earnings, right? This earnings release, like this example right here, this is the earning release here. These are the weeks ahead of the earnings. So in between this time frame and this price action right here, I'm trying to find out where price starts to react to a bullish point of interest, right? The bullish point of interest that I would have been looking at is like this area. This is a bullish price gap. maybe this area is also another bullish price gap right here. So if I was looking to set up ahead of this earnings release on the July, I would have been buying contracts, either leap contracts or medium term contracts where that expire after the earnings. So there would have been a July 11th contract on that we could have bought on, because you have the end of that week is July 11th. So we would have probably been buying July 11th contract. And I would have started buying them, maybe I thought that it would, maybe I would have got in some in between 51.14 and 48.83. Maybe I would have bought one or two between this range. Then when we came down into 46.42 to 45.33, I would have been buying some, and probably more than one contract, or like multiple contracts down here, because now I'm in a very oversold area, and you can tell because of how far we came off of this 53, 56 high. And we reached a bullish point of interest in this price gap. So that is definitely a good area to buy from, knowing that I got earnings if I'm expecting that we get a positive results on earnings. So if I'm buying contracts here and here, and I expect us to have good earnings numbers, and I'm using the charts to tell me like, hey, this will probably be a good earnings release. And I'm also looking at the data on the company during this time to say, hey, does this have a high or low probability for good earnings? And if I'm thinking that it's going to be good earnings, I'm scaling into my position as soon as I get into this area and this area. And once I do, if I do pick this the right way, I'm getting to being, I get the opportunity to get in somewhere down here and somewhere here to take out this high and this and create this high here. So at this point, if I'm in from anywhere between 48 and the high we make that's here, I'm up 18% on the stock. I'm up to almost 200% on the options. If I get in somewhere down here, I'm up 27% on the stock. I'm up 270% on the options, right? So I can take out profit at any point in this move up, right? Where I'm getting in down here, or I got in right here, but I'm up, so I can close out at any time. And that's kind of how I approach what happened with this move, right? This was the same setup as this, right? We had already made our high here, and the earnings release was here, right? Before the earnings release, we had opportunities to get in bullish for this move between this high and this low, right? Anywhere in between here. And then the earnings release was on this day, right? I'm expecting positive results. We got positive results on both the earnings and the revenue. I started sizing into the trade near the lows. I got to take from around where we entered at 57. At the high, we were up 9% on the stock. We were up 9% on the stock, and that means we were up 90% on the options. And depending on what option contract you got, you were actually up 100% in some cases. Because on one of the contracts, I was up like 125%. So I got almost a 1.2 R on the return, right? So that's how you got to look at this, right? And you don't have to always get your target, right? I didn't get, my target was 63.91. I thought we were going to take out the high, but didn't like what we were doing, so I just closed it out and I took my profit. I actually had a pending order to take me out of the trade once I was up 100%. And that's how I took Delta and how I took some of the contracts on Neo and some of the contracts on Nvidia. Same thing. Apple didn't play out. I didn't actually get into Apple setup because we stalled up around here. Once I saw we stalled, I was kind of like, on this one. I still thought we might take this eye out. So I never got in the Apple setup. Plus, I was already in like 4 different setups on the Apple, but Apple didn't quite play out the way that we thought it would. We did take out this eye, which we thought it would do, but we never took out the all-time high. And then we just sold off on Thursday and Friday. So I'm not really interested in Apple yet. This is actually good, but because look what we got. This is actually this would meet the requirements for the setup, right? Earnings play. So we got our high here that we made, and then we got our all-time high. We are starting to sell off, right? And I think that Christine was asking me about this, and I was telling her, like, I think I remember telling you, like, I'm not so keen to the Apple setup. I didn't really like it. I think I remember saying that, but I don't know how we approached it. But I really didn't like the Apple setup because we have been hearing negative stuff in the news, right? We have been hearing that the sales for the iPhone 17 hadn't really jumped off like they thought it was gonna do. And I still think it will push up. But once I heard that, once you start hearing those kind of negative news, it's kind of giving you insight on how it'll kind of play out, right? And then another thing you can look at too is you can look at um this tool if we go to Apple, right? I pay attention to the analyst ratings, right? And all you gotta do is just click on the from your watch list, just click on it and you can see this at the bottom. Um, analysts are analysts had went from a strong buy to a buy. That means that they believe that there's some type of negativity that's there in the market. Then you can go into see the full forecast right here, right? You can see that they believe that this within a year or a year time frame, they see 20%, 26% to the upside and a possible 26% to the downside, right? 22 analysts think this is a strong buy, 9 think it's a buy, 18 think it's a hold, 1 think it's a sell, 2 think it's a strong sell, right? Um, and you can dig into the technicals too. Where are the technicals on this? Technicals here, more technicals, right? You can see here, these are analyst reviews on the daily and weekly, and you can click on that to change your insight on this. But a lot of people thinking it's neutral right now. It could a lot of people think that it's neutral. It's a lot of people on the oscillators, which are like your RSI tools and all MACD and stuff like that. Then on your your moving averages are kind of telling you to sell or be neutral. Some telling you to buy, but you don't necessarily have the information to say that, all right, this is actually ready to buy it, right? You don't have anything that's telling you, hey, here's a strong wick. Here's a strong rejection or engulfing candle. So before I can actually look at this, I need to see something that's giving me more information than it is. And that's kind of why I wasn't really keen on this because I wasn't hearing a lot in the news and I wasn't seeing a lot on the chart. And I really don't like to buy at highs anyway. I like to see the market dip before. So if we hold inside of this range, and that's now between 246 and 239. If we hold inside of this gap, 236 to 234, I may look to see if something play out as we get closer to the earnings release on the 30th. If we don't hold those, there's liquidity here and at these two lows at 224 to 226, right? Which actually makes sense for us to come down there because that's our, that's our next really, really big whole quarter number, that 225 number, right? So it actually makes sense for us to actually drop more to go ahead and sweep some of this or hold inside of one of these levels. But I actually like us to sweep this and come into this 218 area because that means that we take the quarter point out, the 225 area. In the 225 area, that's a good area for us to see some more buying, right? And then if we look, let's go back to the options area, right? And let's see under the options chain, right? Let's go. Here's another thing you can do, right? You can see the volume at particular price points. Where are we seeing a lot of volume? We see a lot of volume at 275, but where do we see the volume on? Let's look at a date after the contract. So this expires on the 30th. Let's look at the 31st. Got a lot of volume at 260. Where do we have volume on the downside, right? So below the strike price. The strike price is 245.27. 245.27 is here. We got some volume at 245, 235, 225, but not a lot. But as we get closer to this October 30th date, watch what happens at the 225, 230, 240 levels and see if we start to get volume and where we start to get volume. Because once you see that, then you'll kind of get a clue as to what price level are we starting to see buyers, right? You can see right now there's a lot of volume on the sell side at 245, a lot of volume at the 240 right now. It's showing volume to the downside, but it might not be. It might be that people have just fake orders right down here, and they actually want you to think that it's gonna sell down here, and then they're just gonna buy them up. So you just gotta kind of pay attention to that, right? Then we got Nvidia. Nvidia. I don't have anything yet on Nvidia because again, we took out the all-time high like I thought we would. We didn't quite get to the 200 price point. I sold out right around the high, around 195. I put a pending order up here at 195 because I got in around 184. We went to 195. That was around 5% move on the stop. For my option calls, that was 100% move. Soon as I got to 195, I already had my pending order in and it closed me out. So I don't have anything left on the Nvidia trade. I think I got one contract left. Yeah, I think I got one. So now, where are we in relation to the earning? They report their earnings on the 19th. So because they report their earnings on the 19th, I had marked this one up. Looks like we can get a stop off right here, somewhere between this gap right here. And let me whoa. Oh. let me take that off. So on Nvidia, we could go as low as this gap, right? Around 172, because we got another gap right here. And we got this gap right here. But I still think before the end of the year, we get that $200 price point. I just don't know how we're going to get there, right? So with that being said, there's the gap that we have right here. I think we could come anywhere inside this 180 to 177 range. So worst case scenario, we come to the 177 and we move up from here. And then, of course, we always have the circumstance where we could push up and just go. Some news could come out, right? So that's why I always say we could just be pushing up, right? We could do that. Or we also have the potential to use this like a fair value gap. So something inside of here could also cause us to push up immediately and then reject to the downside. So that's always a consideration as well. So this is kind of what I'll be looking at. Either we immediately just take out the high that we just created up here, 195 area, just out of the blue, or we push up into this candle and then sell off to one of these levels down here, or we just immediately start to push down and then we hold in either this level right here or this level right here. So that's how I'm gonna be looking at Nvidia. That's how I'm gonna be looking at Neo. And let me send you the charts on these.
Like one more thing, like you are looking for information for company data, right? So what exactly you are looking for that?
I'm paying attention to how the news is talking to them, talking about the company. Since like Apple, one of their important things is their iPhone sales. That's something you want to pay attention to. If it's Nvidia, you want to listen out for anything related to China sales, how Trump talks about them, how the how CNBC, if they kick out any news reports on them, that's the kind of stuff you want to be looking out for.
And for Delta,
Same thing, same thing,
same
same
thing.
thing. You might hear something about you might be listening out for something like travel impacts, like right now, what's going on with TSA. They not getting paid right now. How does that affect Delta, where people are missing flights? You might hear stuff about you might be listening out. You need to listen out for stuff regarding like if they make any changes to federal uh laws regarding flying or something like that. So anything that you think that could positively or negatively affect the market or affect that company, those are the kind of things you want to look out for. The most recent thing is like Apple. Apple just had not so great um, news about the iPhone. So, and that's their latest product release, right? So, if I'm hearing that Apple has like not the best product launches, then I have to kind of assume that not make it 100%, but I probably need to be cautious on how I approach the next earnings setup, because if they're expecting the sales of iPhones on the new iPhone 17 to be 1 million sales, right?
Mhm.
Or 2 million sales, right? And let's say that they told Wall Street that we're expecting 2 million sales of iPhones this year, right? Or on this release, but we only get 1.5 million. That means that they don't meet their earnings, they don't meet their revenue outlooks. And that's usually a sign to not buy at that particular moment, because it's probably going to be pushing down.
Okay. And that pink sign of earning, You check that also, right?
Yeah, yeah. This tells you when the earnings is going to be released and
Mm-hmm.
the results, right? So it's pink because it hasn't happened yet.
Okay.
It doesn't happen till October the 30th. This
Before
one,
delta, you check that also, right? You remember?
yeah, yeah, yeah. I always check this.
Mm-hmm.
This has already been released.
Okay.
Apple reported on the 31st. They beat earnings on this day. You can see over here, they beat earnings here. They beat earnings here, here. So they've been beating earnings.
Mm-hmm.
They've been beating earnings, but leading up to earnings is usually where you want to pay attention to that kind of news, right? Because
Mm-hmm.
it's just like, like they say, right? They they show you one thing so they can do something else, right?
Yeah.
And in this case, like this earnings day right here, after we got to 216, they showed you that it was selling off. So there was probably something going on around this time where they were like, oh, Apple's this, they bad, they bad, they bad. Then on the earnings release, oh, my bad, they actually good. And then boom, the market just shoot up.
Mm-hmm. Yeah.
That's exactly what they do, right? So we seeing Apple go down, go down. Oh, Apple's does the numbers on Apple isn't reporting good. They're not meeting sales demand, right? They're not meeting sales demand. And then all of a sudden we get to 218 right before the earnings release, and oh dang, they actually beat their earnings. They beat their revenue. And now the market just shoot up. And now you sitting over here like, why did I not just buy? You know, it's
Yeah.
because at the same time when you get into these areas, you
Mm-hmm.
should expect news to actually move the market, right? And
Mm-hmm.
that's the same way with stocks, same way with Forex, same way with futures, same way with Bitcoin, same way with crypto, whatever. It's always the same way. They show you one thing, they get it to where they want to buy from, and then they give you something else. It's always like that. You just
Mm-hmm.
gotta be patient.
Mm-hmm. And for NVIDIA, are we looking for any particular strike price and that
Not
option?
yet.
Not yet.
Not yet. I
Huh?
gotta we gotta wait and see how this sell-off that we just had on Friday, because that sell-off that we had on Friday affect all markets. So
Yeah.
before we can establish new setups, we
Mm-hmm.
gotta see how this play out.
Got it.
I don't want to take only long term I have right now is Neo. And I got one or two Nvidia contracts left.
To me too. Not
Yeah,
NVIDIA, but
and I'm
Neo.
gonna keep those because I'm gonna keep those because I like Nvidia anyway. And you know, even if I do, lose a little bit on that, I've already made 200%. I've already like doubled one of my accounts on that anyway, so I could take a hit on that. I could
Mm-hmm.
take a hit on it. If I got to get out, as long as I don't, go down over 100, I'll even take a 100% hit on that. I'm okay with that.
Okay.
Worst case scenario, I close out and it's a 50% loss on that particular trade. And that's okay. That means I would have probably only lost 100 or $200. But I've
Mm-hmm.
already made more than that. So I'm okay with that.
Mm-hmm. Mm-hmm.
Same
Got
with the Neo contracts. Like I got two Neo contracts left. And the Neo contracts, I bought those for no, the Nvidia contracts. I only got two contracts left. And I bought those contracts for 44 cents. So that means I bought those at 44 cents, which means I only paid $44 for each one of those. If I lose both of those contracts, that means I'm only gonna lose $88.
Mm-hmm. Yeah.
And I'm okay with that because I only got two of those contracts left, right? So I already closed out the other five, you know what I mean? At
Mm-hmm.
100% in profit. And I'm
Yeah.
good on that, right? So that's how you gotta look at it.
Mm-hmm. Got it.
Um, dollar. Now to the charts. Dollar. We met our target, right? We said that we was gonna probably come up into this area. This is on the daily. We came to the daily fair value gap. I think this is still in play right now. So how we react to this will kind of determine where we go. Because we could we took all this liquidity with this move up from this low to this high. We took all of this. We have the conditions for this to sell off now. But how we react to this will determine whether or not, because we could also hold into this to go and get this high. So that's why I say we either push up and we hold inside of this and we sell off, or we just go ahead and push down. We hold. There's a fair value gap on the lower time frame that's right around here, and then we have this price gap right here. That's where we could be holding. If we're still bullish, we will trade through this and above this to take this high. If we bearish, we're going to start going down into this fair value gap on the lower time frame, or we're going to trade into this gap, one or the other. And if we stay bearish, we'll use that same area where the fair value gap is to invert it and sell off to challenge these lows right here. We'll get more. We need a little more information on how we respond to this, but this is overall what I'm looking for on dollar. DXY. Gold looks similar in the sense that we have met our target, right? We met our target last week, and last week, let me pull up the chart from last week. Where is it? Let me go to my page. Let me go to the Facebook group. So last week, futures. I be feeling like y'all don't even be looking at this stuff, man. I should be posting stuff. Y'all don't even be looking. Let me see. Futures. Only person be looking at be Anna. Y'all gotta make me feel good.
You are happy, right? That's it.
y'all gotta let me know y'all saw it.
It used to pop up on my timeline and now it doesn't. Like I wasn't getting I used to get notifications when we go live, when it's time for the weekly
You
call.
gotta turn on the notifications for the group.
Okay, I gotta go back and do it because I used to get notifications.
Yeah, I think if they've changed their algorithm, I think. I don't know. But this trade, this was really the only trade I got in on was only futures trade I got in was this 20-point move or 200 pip move on Monday here. And I wish I had stayed in it because as you can see, that was the entry for the whole freaking week. Like, bro, I'm so mad at myself on this. I'm mad at myself, but I'm also happy at the same time that I could see it. But it's like, dang, man, sometimes you got to be a little more patient. Like, at least leave one contract in. And I always try to. That's why I like trading micros instead of the mini, because I know I can leave at least one contract in. Like, and I won't feel bad if I lose that, right? But whatever the case is, we thought we would push down, hold here or here on gold. We did. From that price point was here. We pushed down, we held here, and then we pushed up, but we didn't actually take out the high. But we had already exhausted the whole move. We had already pushed up overly past what we thought the targets would be. So for us to try to go up and get this high at the end of the week was actually kind of like hopeful thinking, but hey, there's nothing wrong with that. So we got this fair value gap that was supposed to be bearish. We actually rebalanced it and we trading higher. So now that we trading higher, our first area that we need to pay attention to is 40.56 to 40.46 area. If we open up and we start trading up here, how do we react to this? Right? If we sell off, we coming back into this inverted fair value gap area. And that's 40.21 to 39.87. And if we don't sell off, we're going to trade through this, and then this will be how we reach this new all-time high to take it out. And then overall, the target is the 4,100 area. That's the new whole number. That's above current price. We could shoot higher, but the one that stand out the most should be 4,100 to you, right? Then the next option is we could be just selling off, right? We could just sell off and go ahead and take out all of this little liquidity here and then trade down into the fair value gap that got inverted. And then we hold in here somewhere to take out the high. Then another option is if we sell off, take out all of the liquidity, and then trade down into this daily fair value gap, which you can see here on the daily. I'm gonna hide all this stuff. You can see we got this fair value gap, and then we could trade down into this fair value gap and then see if we're gonna do anything with this range right here, right? And if we get down in there, we could either sell off from the high, middle, or low, but it looks like the high and the middle are the most strongest areas right now. But we still got this. We still got this. Let me see. 343. We still got this area, which is an inverted fair value gap that was supposed to sell, that we used to buy. And it's got the monthly in there, right? So if we were to push down, there's two strong reasons why we could also push all the way down here and then bounce, because we got liquidity here. We have a daily fair value gap here. We got an inverted fair value gap here. We got the old weekly opening and an old monthly opening. So that's four reasons why we could also see price push down there, but I just don't see it yet. And I would need more information to see that it pushed down there, because I think once we get into this daily fair value gap, I think we hold. So that's what I'm gonna look for gold. This is the chart for gold.
So I think we're gonna get to 5,000
I
before
do
the
too.
year.
I actually think we might even go to 6.
Goodness.
I think that because if we get more bad news, people are gonna start dumping more into gold, and the more bad news we get about the economy, the more gold rises. So, it's kind
What
of
about rate cuts? They said they are cutting rates.
they cut rates once. Let me pull up the tool. CME Fed Rate Watch tool. Let me send y'all this link to rate tool. This tool is from CME Group. They do a projection of what the rate cuts will be, and if we'll get a rate cut, what the percentage should be at the given rate cut, right? And this is coming from the futures data, right? And we had our cut last month, which was a 25 basis point or 0.25, right? Depending on how you look at it. Our current is 0.2 is we're sitting at 4.25 on the interest rate. And they always say between 400 and 425, but really it's 4.25 to 4, right? They're suggesting that we should end up between 3.75 and 4.0, which means we'll end up getting a 25-point basis cut, right? So they're projecting that it's a 97.8% chance that we end up at 4% interest on the next interest rate. The next interest rate is scheduled for October 29th. So if we get a rate cut on October 29th, they're saying it'll be 25 basis point, and they are at it about 97%, 97.8% probability that we get 25 basis points. So that means that since we started cutting rates, we've already had one 25 basis point. They're saying we'll get another basis point, so we'll be down off of the 4.5% that we were at throughout most of the year. But when you think about the rate cuts, what do you have to consider with these rate cuts? They are in line with fourth quarter spending. This is the time of the year that most of the money is spent throughout the whole year, holiday season. It's not a coincidence that they're cutting rates right now as we get to the point where we're spending more money. The way you need to look at this is you need to think, right? This is how you got to think. You got to say, why are we cutting rates now when we didn't cut rates anytime before this? The jobs were being lost. The economy was going down and going crazy. Now, what they're essentially saying is we're going to lower the rates of all the spending interest rates. That's buying a house, that's buying a car, that's getting a loan. All that will come down along with these interest rates because they know that if you're going to spend money, you're going to spend money at this time of the year. You're going to be buying Christmas gifts. You're going to be traveling more. You're going to be making new purchases all throughout this fourth quarter right now, in the third quarter, into fourth quarter, into early Q1, right? That's when you'll see companies offering the most sales. That's when you'll start seeing the most discounts. That's when you're also, more importantly, going to start seeing the borrowing standards for loans and credit to be decreased. So where in one case you needed a 650 on your credit score to get a loan before they lowered the interest rate, now you only need a 625 for the same loan, right? And at the same time, the requirement for your credit is lower. The interest on the loan is lower because they've lowered the interest rate. But what they don't do is, in a lot of cases, they don't lower the price on stuff. They just lower the borrowing requirements on it. So you still may pay $300,000 for the house, but now instead of paying $2,500 a month for it, now you're gonna pay $2,400 a month for it. But they still got you in the loan. They still got you in the car. They still got you to open up a new credit card. And then as they lower the interest rate even more, that means now where you needed a 650, you also then when they lowered it the first time, you only needed 625. They lowered it the third time, now you only need a 615. So they're essentially creating new demand. It's supply and demand now, right? They're creating new demand. All these companies have ordered all their products for the holidays. They have they're overly surplus now. They got more supply because they anticipate the buying to increase as the interest rates drop and as the holiday season come in. That's how you got to think about this. You got to think about it like a mastermind, right? You got to think about it think about the villain in the movies when they have all of their plans plotted out and they like sitting over the city and like scowling down over the city, or like Batman sitting at the top of the building just looking over all of his plans. It's the same thing. You got to look at it the same way. So that's why you start seeing that, right? We already opened up the market. We got gold pushing up, but I already dropped gold in there. I dropped that in there. So now we can go to YM. We already got some good
Did you
information.
drop? Did you drop the gold?
Yeah, I dropped gold.
Where?
No, no, you didn't.
I dropped it before I dropped the rate tool.
Where are you dropping this stuff at?
Oh, y'all don't see it?
No,
Oh,
no, I
bad.
think you did copy, but you started to talk about that rate.
Bro, I'm off today, right? Everything in the wrong chat. So let me get that. I'm
So you are
crazy.
doing that in wrong chat?
Yeah, I did.
Okay, okay. Means at least you are doing.
Nah, man, you gotta catch me, man. All right, hold on. NVIDIA. Dang, so none of this been going in there. Delta. Neo. Apple. So I've been dropping all this stuff in the wrong chat. I'm glad you caught me. Here's dollar. And here's gold. Here's the rate tool. Okay, now you got them, right?
Yeah.
Yeah,
Okay,
thank you.
my bad, player.
No, you're good.
My bad, player. All right, so same thing with YM, right? We sold off these days. This is engulfing candle. We had a change of direction once we took out this low and these lows, right? So now, what's inside of this candle that we could potentially sell off from if we stay bearish, right? If we stay bearish, what could we be selling off from without looking at what's drawn on the chart? There is on the 4-hour fair value gap, right? That's the first thing. There's also this old bullish engulfing candle makes a fair value gap. This whole move, this is inverted, right? So there's an overlap between this move and this move. That means that the probability of price trading above this inverted fair value gap and above this bearish fair value gap is low, right? And if we go to now look at the charts, you can see, right? We got this overlap, this whole little area right here that was bullish. Once we traded through that, that became bearish, right? So now, where's the overlap? The overlap is mainly in this area right here. Mainly in this area. So that means you have the high and the low of the inverted fair value gap here. But where is the overlap of the new fair value gap that we got? We got the high and the low here. The majority of the price between the overlap is between this high, the high of the old fair value gap, the inverted one here, and the low of the new fair value gap. So that's kind of where I'm looking for. If we get a sell off, this actually is probably shouldn't trade too much higher than that. Right? Shouldn't trade too much higher than this. So once we get around the midpoint of the new fair value gap, which is 44,333, I'll be looking for setups. I'll check when we get to the low of it at 46,067. I'll check down there too, which is where we already are right now. I'll check. But you know, I'm thinking that we go at least to the middle because there's definitely some overlap in here. So once we get to those areas, then I'll see what I want to do, right? Our bullish standpoint should be if we hold inside of this, and if we hold inside of this and we push up to the top, right? That's when, and we trade through the top, that's when we can kind of look for a buy. And I need to add this one little, if we hold in here and we trade above it, that's when we could see like, hey, then we should see, hey, we trade above it, invert it, then we'll use this to probably buy this whole range from to go higher. That's when we can say, all right, now we're bullish. If this happens, that means that we inverted this to the downside to push up higher, right? But I'm thinking that if we pushing up, we rejecting here. If we're still bearish, we sell off from here. And then that means we come into this daily fair value gap. We take out Friday's low. And then we start looking at if we're going to take out this previous week low. If we go even further to the downside, we trade into this price gap from off of the daily. And then we got a weekly fair value gap that we could trade down into. If we get to one of these areas, we could also see a buy from inside of this. I don't have it on there, but you know what to do if we get in here and we start seeing price hold. I don't want to muck up the screen too much. But you know that if we get down here, we can also see a buy from anywhere between 45.67, 676 to 45.333, anywhere between there. I'm not gonna, I don't want to, I'll just draw it on there, but you know what I mean. So this is, we pretty much, if we take everything off, you can see why, you know, right? We go to the daily. We got fair value gap here. We got one down here. Go to the weekly. We got this small fair value gap here. We got a gap down here. We got equal lows here. So if we are looking at this, like we got this engulfing candle, if we can't take out this high, that means there's something inside of here that we probably are going to sell off from. That's why we're looking at that 4-hour fair value gap right here. That makes sense?
Yep.
That makes sense. Okay.
Yeah.
So this is the play for YM. We got a similar setup for NQ, but we just got different points of interest. Go to the daily. We took out this level, this level, this level, and this level, all with this one move, right? Then this is a fair value gap that's bullish. It should have bought from here, right? And it did. But now that we traded through it, this area is now bearish. So if we get price to push up around this area, which is 24,914 to 24,994, there should be something around this area on the lower time frame that lines up with us potentially selling off from right here. And if we look at the weekly, we got a fair value gap here, and we got an order block right here. All right. So if we still going down, that means that we're gonna have to go back to this fair value gap, and we're gonna probably have to go to this order block from a weekly perspective, right? So now if we go to the 4 hour, there's same thing, and that's the fair value gap that got inverted. This is a big, big, big fair value gap to the downside. So we should see overlap somewhere around that area that we mentioned right here. And if we see overlap, that means that it's happening at the middle of this fair value gap pretty much. So now if we open up the drawings, right? Again, we took out this low, we took out this low. We don't even need this on the chart no more. Don't need that. Don't need that, right? But now we got our overlap that's happening mostly between this area right here. Right? And this area right here lines up with the middle of this 4 hour, and then us trading into the inverted fair value gap over here. So that's where highest probability that we come into, right? But once we get here, we need to wait to see how we get our entry. And if we get rejection in here, we should see our rejection coming off of the 15-minute or the 5-minute chart inside of this area. If for some reason we get above this, there's also this area right here that's got inverted as well. So maybe we see that like, but if we add in the level between 25,256 and 24,987, it pretty much puts you right here, which lines up with the middle of this. If we measure the distance between this level and this level, that pretty much puts you in the middle of this. And that would be the other area that you could look from to either sell from or consider this to be an area of interest right here. We don't need it yet because we ain't got up there yet. But for right now, you can see we already starting to trade into this 4 hour fair value gap from this low. And once we get here, we need to see what happens. Now, the other thing that I don't have drawn on here is if we get inside, you know, we already starting to push up. If we get to this point and we start to see price hold on the inside of this level, that's when you can start looking for, all right, maybe this gets inverted. Then you'll see something like price hold around the middle. And then you'll see us hold around this level. And then maybe if we trade above this, that's when you can say, all right, cool. Now this is bullish. We can start looking for buy setups, right? That's the only way I'm looking for. Really looking for longer term buys if I start seeing us hold above the 24,717 area. If we trade above it, I'm okay. Because I know we still got a high probability to go into this area near the middle of that. If we get to this and sell off, I'm looking for us to sell off to take out this low, which lies in between this weekly fair value gap. And then if we trade below that, there's the order block and the inverted fair value gap. So I'll be looking for us to come down into here. This is the setup for NQ. And ES kind of look the same, just different points of interest. You can see we got a weekly order block. Let's take the stuff off real quick. We got this order block on the weekly and this one, right? This is the one I really want to see what happening, right? On the daily, We have this gap right here that we traded through, and that held. So if we come down into around this 6509 area, plus this is an order block right here too on the daily. Then on the 4-hour, we took all of this liquidity here, all through this. There's an inverted one right here. We already kind of sitting in that where we made this low. We got this bullish one that got traded through and then got inverted and then it held. So we got all the reasons to kind of line that up. This got inverted, which lines up with our monthly, and this fair value gap right here. So we know the most buying and selling took place right around the monthly. And we know that if it come back there, if it's going to stay heavy, this is where we get the sell off somewhere around the 67.54 area to 67.29 area. Now we can throw the stuff on the chart. We don't need this no more because we took this. We took this. We took this. This been done. We took this. We took this. And I'll just leave this as our main area. But we still took this area. There's still some liquidity left over here. There's that weekly order block. And now we're already at the 665 area to come back inside of this fair value gap. And then you can already see we got overlap at 629 to 654. So that is probably, that's a big area to climb up to. So I kind of want to just see us stay. I actually don't even want to see us come to this one. I kind of want to just leave that. So I'm gonna wait and be patient with ES on this. Because us even opening up the way we did today, that was a lot higher than I would have expected us, because we pretty much already opened up and hit where I thought we would already. Us jumping already from the close to the highest where we've gone so far, already almost 2%. And that that doesn't even like add up right now. So we're gonna need a little more information on this one, because this is already open up as a gap when no buying was triggered on the close. No buying was triggered. We can go to all the lower time frames to see there was no signals of buying. So you know that's institutional. All the way down to the 15-second is no signals of buying. But we opened up the market up almost 2%. That don't make no sense. So manipulation is happening already. 1 hour fair value gap is right here. It's overlapping in the 4-hour. We could see price at 6692, 6717, 6742. It still line up with all of that. So I'm gonna just give it on the 4-hour. See how we react in here. But if we do sell off, we try to take these equal lows now. And that's Friday's low. If we sell off from inside of here, since we already pushed up, we got to account for that. Worst case, we push up into this. And then if we do, we sell off from there to at least try to take out this low right here and trade into this order block. Now that we've pushed up so hard, I don't know how probable this is because it looks like they putting in the fix already. This looks like the fix is going in right now. So we just kind of, I think we're gonna have to be patient with this one. Plus, we don't have no trading on Monday. But I think the fix is in, so I can already tell we're gonna have to be patient with this. But this is what I'm gonna look for. How we react once we get up here, because that's highest probability. We get a reaction from there. Whether it's up or down, I think we get a reaction from there. They putting the fix in. So let's be patient and see what we got. And I don't have anything else, but I guess I'll be chilling on Monday since I won't have nothing to trade on Monday. I'm not gonna get in the market because I think the markets close at 12 on Monday. I think it'll be open. It'll just close at 12. Maybe I'll get into some, but it'll be a quick, probably scalp or something like that. Nothing probably gonna be to write home about. If I do get into something, it'll be low risk. I probably want at most 10 minis, 10 micros, one mini if I get into anything, and probably only risk about $200 to $300 on my prop firm trades. In my live account, I might not even trade on my live account. Definitely not getting into no options on Monday. And yeah, yeah, that's probably how I'll look at Monday. So I probably won't be able to get into a trade until Thursday, which is a lot of news on Thursday. So that makes sense. Thursday and
Mm.
Friday.
Got you.
Yep. Yep. So that's all for me, man. I hope this recorded. I know it did, but I don't know if it got the first part, the mindset part, which I hate. But if I got to do it over, I'll do it Wednesday. Because I like I said, I really, really want y'all to jump on this change your standards on YouTube video. That was super gems in there, man. Like that was. I'm gonna drop the link one more time.
That was good. Definitely.
This one was super clutch, man. Now that I know I was dropping the link in the wrong place, I already know y'all don't have it. So now you can get it.
Yeah, thank you, Corey.
No problem, Sheila. Who is Mob Boss? Who is that person? I ain't heard them say nothing, but they on here. Who is that? They
My fault.
huh?
Trees, I think maybe Ario changed it, but I don't know.
No, yours still say tree.
Cause that's me.
Oh, what's
I'm
up,
from
cuz?
my iPhone.
Oh, okay. What's going on, man?
Not much, man. Just trying to,
I'm about to call you. Don't say a word. I'm about to call you after this.
gotcha.
All right, y'all. Let me stop sharing. I will drop the link to this on YouTube once it downloads, and I'll send the link in the group, and then I'll re-drop all the charts in there. Peace
Thanks
out.
for
Bye, guys.
Peace
Bye.
out.
Bye, guys.